Hello and welcome to BQ Prime. Joining us today is Mr. Manish Tandon. He is the CEO of Zensar Technologies. He's speaking to us after the company's second quarter results, where the revenue rose 1% sequentially, but there was an 11% jump in net profit. The uptick in revenue was despite a hit in the US business, which declined about 4.3%. Mr. Tandon, welcome to BQ Prime.
Thank you, Tushar, for having me. It's good to see you after in person.
Okay.
I think the last time we met was over a Zoom call.
Yeah.
I can tell you it's much better doing an interview in person.
Thank you. My first question to you, sir, is how would you sum up the Q2 results, and how do you see and can you just talk and elaborate to us about how the impact in the US revenue that you have seen in the second quarter?
So actually, in summary, Tushar, we had all-round very positive results, except that high-tech as a vertical declined for us. And high-tech is concentrated in the US. If high-tech vertical had been flat, we would have seen 4% sequential quarter-on-quarter growth.
Okay.
So we had, I would say, there are a lot of tailwinds, but a large headwind, and hopefully the tailwinds will accumulate and push the headwind overall.
So how do you see the next 6 months panning out in that sense?
See, from a market perspective, I don't think that anything very dramatic is going to happen. So the industry will follow the same path as it has done in the previous year, where H2 is supposed to be slightly weaker in terms of growth.
Yeah.
And that is because of furloughs, holidays, so on and so forth. So that is something that is not going to change overall. But from a Zensar perspective, we had good order bookings as long as we can manage the headwinds.
How big was the order book in the second quarter?
195 million, actually $194.8 million, which is about 30% higher than what we did in the previous quarter.
So since we're discussing with the order book, how is the order book looking like? Are your discretionary deals started coming in, or have they completely dried up? Or are you more focused towards achieving large deals that pan out over several years?
Okay. So first of all, I want to clarify what my order book means.
Okay.
Because order book means different thing to different people, different companies. My order book is based on SOW, statement of works signed.
Okay.
So I expect each dollar of my order book to hit my top line.
Okay.
All right. So if a deal is $10 million deal, but SOW is only for 6 months, we will say order booked is for 6 months only. We will not say that TCV is whatever, so on. And the second question on order book that you had on how is overall, so order book is downstream of a funnel, right? So to gauge order book, you have to look at pipeline, and our pipeline is up significantly also, is what we are seeing. So I am cautiously optimistic that we will continue to do well on our order bookings.
So is this environment, which is, we are cautious about it and there's some pain, has this changed your EE approach to deal making, the experience to engineering to engagement that we discussed in the previous quarter? Are you tweaking the strategy? Are you modulating it according to how deal making is happening in the next 6 months?
No, I think that this messaging is resonating extremely well. And it is not, most people think that, experience, engineering engagement is more about discretionary projects. Actually, we as a company are applying the same principles, even on ongoing support, maintenance, all those kind of projects also. So we are talking a unique, we are giving something unique to our clients. And whenever we are going in for conversations, I think we are making a very positive impact. We almost always make it to the short list, definitely. And hopefully our win rates are going to reflect that also.
Okay. So we talked about top line, we talked about deal making. Let's talk about a bit about your operational profitability. You have maintained your operational profitability at about 15.65. have you given out wage hikes, which some of other IT companies have delayed by a quarter or so? Have you stuck to your wage hike schedule? In case you have stuck to those, what are the other margin levers that you have to play out to maintain your margin levers? Sorry, your margin at about 15 to 16%, or are you looking to grow it even further?
So first of all, I'm very proud to say that we are one of the few companies who have given pretty good wage hike on schedule, on time. It impacted our bottom line by about 2% overall. But in this business, there are various ways in which you can manage and mitigate your bottom line, which we did. There are lots of levers. There are first is utilization, second is pyramid, third is trying to get higher rates, and so on. So there are lots of things that we did, and it's very commendable that the team has delivered these kind of margins despite the wage hike that we did this quarter. Also, since you're on margin, I just want to emphasize one thing. In the first half of this year, Zensar has made a higher profit than what it did in the last full year.
Okay. This is in the first 6 months of this fiscal?
In the first 6 months of this fiscal.
Okay.
So, while people look at, just revenue growth and margin percentage, ultimately revenue growth into margin percentage, if it doesn't translate into EPS or profit, not good enough.
So you're actually preempting my next question. You have reported a net profit jump of 11.3%. You were saying that if the wage hikes hadn't been there, it would be even higher. Yeah. So what is driving so much profitability for you in this climate?
I think it's disciplined execution, nothing else. There was you would see that our revenues have gone up and our headcount has come down. So
I wanted to talk about that as well. So how much has the headcount reduced?
When I joined, I think the headcount was something like 11,500. Today, I think it's 10,300 or 10,400. And by the way, we have not cut any muscle. Okay. It is just fat that we have cut. Okay. Right? Yeah. In fact, we have built muscle. We continue to hire close to 400, 500 people every quarter, even today. But
the pattern stays for the next 6 months as well?
It's just dependent on the demand situation. See, our utilizations were very low. Now they have reached about 83, 84%. You can maybe take it up by 1 or 2% more. Anything more than that, it starts impacting your revenues, because there's no point in not having a bench and then taking 6 months to deploy on a project, right? Yeah. The good thing is that the talent market situation is such that we can afford to do just-in-time hiring. So there's good talent availability today. Thanks to other companies have not given wage hikes. People are looking to change also. Okay. And our attrition has been one of the lowest in the industry. Okay. So I'm very pleased with our performance on the people front.
Finally, you have recently joined Zensar. I think it's about a year. I think it'll be complete
10 months.
10 months, I think by December. So what are your near-term goals for Zensar in this climate, and what are your long-term goals for this company? Please.
So near-term goals were to stop the bleeding first. Okay. When I came in, the company's EBITDA margin was 8.5%. Today it is 18.5%. Now that we have some cushion, now I want to invest in the business. I want to grow our revenues. I want to invest in our employee training. I want to do more on sales. I want to invest in deals with customers. As you know, large deals are not very profitable in the first couple of years, right? So that gives us that cushion to invest the money back into the business. Long-term goals is very simple. I think when I started, we were in quadrant 4 of performance of the industry. I want to see us in the top quadrant over the next 3 years. And we're not going to get there immediately. It will be a gradual journey.
And best of luck for that, sir. Thank you for chatting with us today.
Thank you, Tushar. And very nice meeting you.
Thank you, sir. Same.